It's Money on a Monday. We speak to Neesa Moodley, personal finance editor at the Daily Maverick. If you're one of the 9 million South Africans who are primary members of medical aid, you may have gotten emails and letters from your medical aid company about increases to your fees that will come into effect. Medical cover tariffs are adjusted, of course, every year to take into account inflation and other factors. And sometimes it means it becomes less friendly for your budget and other expected needs. Neesa Moodley, thanks so much for joining us. I spoke to the person who deals with my medical aid on Friday, and I'm thinking of adjusting or maybe even porting to somewhere else, and telling me on Friday that because of the COVID period, the year in 2020 and 2021, there wasn't a big adjustment to medical aid tariffs because fewer people were presenting to their doctors and other specialists during that period. So medical aid companies had quite a fair surplus in 2021. That's now rather been eaten away. So many people are seeing quite a bump or a jump in the medical aid tariffs as communicated over the last few weeks by medical aid companies in South Africa.
Morning, Lester. Thanks for having me. That's quite right. Yes, so those surpluses, and I think a lot of the medical schemes saw fewer claims during the COVID years because people were hesitant to go to the doctors and the hospitals. And they did have surpluses, and as in they had extra reserve amounts. But the problem is that because people were so hesitant to go to the doctors during those COVID years, and things like pap smears and mammograms and the screening tests were not done, what medical schemes are seeing by and large now, and probably going forward for a while, is a lot of late diagnoses. So where you would have had somebody doing a pap smear and saying, oh, you've got some cells that don't look too healthy, let's sort this out. Now we're getting a lot of stage 4, stage 3 cancer diagnoses, which means more expensive treatment, more invasive treatment, and higher costs.
I'm currently in the personal situation where I'm considering my future with a medical aid company, and many people are looking at some of the price increases that you have been informed of by your medical aid company. But sometimes we've taken out a package that's maybe beyond our requirements. We want to move on, maybe join a spouse's medical aid company with their particular company's provider. What are we looking out for if we are at this time trying to watch the pennies in our bank account and trying to say get the best possible coverage, but at the same time get the best possible price? What are we looking at?
So there's a few things you need to take into consideration. The first thing is if you're already on a medical scheme, you can ask them for an annual claim statement, and that'll tell you in the last year or the last 2 years what have your health costs been, and that gives you a good idea going forward of what you need from your whatever new medical scheme option you choose. Then there's things like you can play around with it. You can choose a network option. So, for example, you can say, okay, I will choose this option where if I have to go to hospital, I will use these specific hospitals. And if I go to the GP, I will use these specific GPs. So that's called a network option, and it usually does cost less. But you need to make sure you have a look at the network and see, how does that network work for you? Because it doesn't make sense to choose that network if the nearest hospital you are tied to is more than 100 kilometers away, and then you're going to end up paying a massive co-payment in an emergency situation anyway.
We've seen a big increase in the gap cover market over the last few years, whether it be radio adverts or whether it be television adverts. The gap cover market has grown. What we're looking at, we're trying to provide that extra buffer. How does one choose the most suitable combination?
I think I like to call it the trifecta of cover. It is pricey. You've got to really compare apples with apples and weigh up all your different options. I would recommend that people use an insurance broker for this, because I don't know that many people are aware, but when you pay a medical aid contribution, you're paying advisor commission fees regardless of whether you're using the healthcare broker or not. The medical scheme's already priced that in. So if you're already paying for it, you might as well use it. And then the healthcare broker who has the expertise can guide you through the process. And in an ideal situation, what you would be looking at would be maybe a core hospital cover plan for your medical scheme. And then you can top that up with medical insurance, which is where you cover your day-to-day and your GP and your pharmacy benefits. And then the gap cover for those times when you get admitted to hospital and then you get slapped with a very high co-payment for the anesthetist or the surgeon who's charging out of medical scheme rates.
With South African families, and 60% of the annual or the monthly income is going to service. There's very little space to save. I have a few friends who call the backup medical aid savings the F-up fund, just in case something goes wrong, and they manage to put a few hundred away every month. You see many South African families as a contribution to those medical expenses and unforeseen expenses, contributing to their own form of a F-up fund.
Absolutely. And the thing is, you've also got to take into account, yes, you can reduce your costs by going for the core hospital cover only, but that doesn't make sense if, for example, you are somebody who has a chronic condition or severe healthcare where you're going for constant pathology tests. That's where the pathology tests can be covered by your medical insurance. You can get those kind of products from even Dis-Chem and Time Bank now. But the costs, I think you're absolutely right, Lester, when you say that the costs have increased significantly. I mean, my own case, we were 2 adults and 1 child on a hospital plan, and I was paying, I think, just over $4,000 for that, for 3 of us. And then this year, just as we were getting towards April, when everything was about to change, we decided to switch over to a coastal saver plan, which has a little bit of a day-to-day savings benefit, and we added a 2nd child onto and my medical scheme contribution has now jumped to over 8,000 Rand.
I currently also have 2 tykes at home, and it's winter, and it's sniffles, and it's all the germs from school. Neesa Moodley, personal finance editor at the Daily Maverick. Really appreciate your time here on Money on the Mondays.